We are now at Chapter 3, Materiality Assessment. In this chapter, we will delve into the critical process of identifying, prioritizing, and reviewing sustainability matters for effective disclosure. As organizations navigate the evolving landscape of sustainability reporting, understanding materiality assessment is vital. This process typically comprises three distinctive phases. Phase 1 involves the identification of sustainability matters, followed by Phase 2, which focuses on the prioritization of material sustainability matters, and finally, Phase 3, which involves the review and validation of process and outcome. Let's start by examining how listed issuers identify and define sustainability matters relevant to their operations. In Phase 1, a company should begin by developing an understanding of its distinctive operating context, gaining broad knowledge of sustainability matters and issues, both internal and external, that could impact its ability to achieve intended business goals and outcomes. In identifying relevant sustainability matters, the listed issuer should leverage a myriad of sources to enhance the comprehensiveness of the identification process. These sources include internal and external stakeholders, business strategy, goals, objectives and policies, Bursa Malaysia's listing requirements, and the guide, among others. Among these sources, stakeholder engagement stands out as particularly critical. The company is expected to engage with both internal and external stakeholders to better identify sustainability risks and opportunities. Typically, there are two common approaches in identifying sustainability matters. In the first approach, identification is integrated into general stakeholder engagements conducted throughout the year. These engagements cover all relevant issues, not exclusively focusing on sustainability matters. In the second approach, identification of sustainability matters occurs through a series of stakeholder engagements specifically designed for this purpose. These engagements are part of the overall materiality assessment process and go beyond general stakeholder engagements conducted throughout the year. The stakeholder engagement process begins by identifying the company's key stakeholders and understanding their needs and expectations regarding the company's sustainability-related impacts. The identification phase should result in the listed issuer deriving a preliminary list of sustainability matters. Recognizing that not all sustainability matters carry equal weight, the next crucial phase, which is Phase 2, is to prioritize them based on their relative importance, essentially their degree of materiality in relation to one another. This prioritization aims to streamline the company's efforts and allocate resources to its material sustainability matters, focusing on what truly matters most to the organization. In determining the degree of materiality, two primary considerations come into play: the significance or magnitude of their respective impacts and their influence on the assessments and decisions of stakeholders. Therefore, stakeholder engagement becomes a pivotal aspect of the prioritization process for identified material matters. As listed issuers navigate this process, there are two commonly adopted approaches. In one scenario, sustainability matters are identified through general stakeholder engagements throughout the year, with an additional series of engagements dedicated solely to prioritizing material sustainability matters. Another scenario is when sustainability matters are identified through specific stakeholder engagements as part of the overall materiality assessment process. These engagements should also encompass the prioritization of identified sustainability matters. Subsequently, the priorities of each stakeholder group are carefully considered and assigned varying weightages. The weightage assigned to each group depends on factors such as their interest in and influence on the company. This prioritization of stakeholders is crucial, as it indicates the significance or importance of a stakeholder group to the organization. This understanding allows the organization to gauge how a sustainability matter may be deemed material. Once the material matters are prioritized, it is recommended for listed issuers to disclose a materiality matrix to clearly illustrate the relative importance of each matter, an outcome of the materiality assessment process undertaken. For instance, listed issuers could demonstrate relative importance by sorting material matters into high, medium, and low categories. Alternatively, listed issuers could establish a materiality threshold, considering all material matters above the preset level sufficiently material to be managed and reported. Some real-life examples from companies' sustainability reports can be referred to in our third edition of the Sustainability Reporting Guide. Validation is crucial. In the final phase of the materiality assessment process, it is imperative to review and approve both the process and outcome. The company's senior management typically oversees this stage. In addition, the company's board shall approve, validate, or endorse the outcome as they bear the responsibility for the disclosed information. The direct involvement of these stakeholders ensures widespread support across the company, facilitating resource allocation and accountability for managing such matters. Conducting a process review is also beneficial in identifying any gaps or weaknesses and exploring opportunities to enhance the robustness of future assessments. Once the material sustainability matters have been determined, the listed issuer should periodically revisit them to ensure that recent developments and changes have been considered and incorporated. Conventionally, a listed issuer should review its material sustainability matters at least annually. In this regard, the listed issuer could either opt to conduct a full-scale materiality assessment or a limited-scale review. For the first option, this involves undergoing the full assessment process, as detailed throughout this chapter. As this exercise requires considerable commitment of time, resources, and effort, some companies undertake this on a predetermined frequency, for example, at least once every 3 years. Regardless of whether a company has general frequency criteria put in place or otherwise, the listed issuer should undertake a full-scale materiality assessment if there are major changes to its business model or operating context. Under certain circumstances, the listed issuer might opt for a more limited-scale review of its material sustainability matters. This could happen after a full-scale materiality assessment in the previous reporting cycle when there are no major changes to its business model or operating context. For instance, the review may involve surveying a smaller sample or subset of stakeholders to reaffirm that key issues remain relevant, as well as obtaining some indication of new or emerging issues. And now, let's address some frequently asked questions. The first question is there a detailed explanation of the steps to conduct prioritization matters? To briefly recap, companies should engage relevant stakeholders to determine the importance of each material matter. Each stakeholder group is assigned differing weightages. For additional information on stakeholder engagement and materiality assessment, listed issuers are advised to refer to our third edition of the Sustainability Reporting Guide and Toolkits, and the illustrative Sustainability Report, all of which are publicly available on Bursa Sustain. Secondly, we often receive inquiries about whether listed issuers are expected to follow the material matters listed in the Common Sustainability Matters, and if they can add their respective material matters. Sustainability matters are considered material if they reflect the listed issuer's significant economic, environmental, and social impacts, or substantively influence the assessments and decisions of stakeholders, and fall under the common material sustainability matters as set out in Practice Note 9 for Main Market, or Guidance Note 11 for ACE Market. Additionally, listed issuers are required to disclose the 11 common sustainability matters with accompanying indicators. Main market listed issuers are required to disclose the first 9 common sustainability matters and indicators, starting from the financial year-end 31st December 2023, and the remaining 2 common sustainability matters and indicators, waste management and emissions management, which should be disclosed by financial year-end 31st December 2024. For ACE market-listed corporations, the first 9 common sustainability matters and indicators should be disclosed by financial year-end 31st December 2025, and the remaining 2 should be disclosed by financial year-end 31st December 2026. Lastly, there are also concerns about whether listed issuers are expected to cover sector-specific matters or if they can add their respective material matters. Please note that listed issuers are accorded the flexibility to adopt any non-mandatory indicator where applicable according to the nature of their business operations. As we wrap up, let's summarize the key takeaways. The materiality assessment process enhances transparency and accountability. It typically consists of 3 phases: identification of sustainability matters, prioritization of material sustainability matters, and the review and validation of process and outcome. The senior management and the board of the company shall bear the ultimate responsibility for the outcome, and companies should strive to periodically revisit their material sustainability matters. Lastly, we encourage companies to continually improve their sustainability reporting practices in line with Bursa's market listing requirements. In the next chapter, we will be covering how companies can manage each of the material sustainability matters that they have prioritized via their materiality assessment process.